Hello everyone, it is Bryce and Ren here, co-founders of Equity Mates Media, and we're here to announce our IPO.
That's right, Equity Mates' initial party offering is here. FinFest is coming.
We're calling all bulls, bears and party animals. The market's closed, the bar is open, and we're trading ideas at Australia's biggest investing festival.
With expert speakers, special guests, DJs and booze, it's an inspiring and empowering event for investors of any level of experience.
So save the date, 15th of October 2022. Head to equitymates.com/FinFest to register your interest today.
Equity Mates FinFest is powered by Strait.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down your barriers from beginning to dividend. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. I'm excited for this interview. There is no more exciting space at the moment than crypto, NFT, the Metaverse, Web3, a lot of buzzwords, a lot of big ideas that we're trying to get our head around. And we're joined by an expert today who is really going to be able to help us and has a pretty amazing story in terms of how he's been getting around this space. So I'm excited for this interview.
Absolutely. It is our pleasure to welcome to the studio Ishan Haque. Ishan, welcome.
So glad to be here. Thank you so much.
So Ishan is the co-founder of Geminio, a $50 million Australia-based fund targeting crypto, NFT and Metaverse investments. So we thought it was a great opportunity to sit down with Ishan and unpack everything that's going on in the space, get an idea of what's attracting his attention, and hopefully get a few tips along the way.
Yeah. And figure out how we can build something in the Metaverse.
Yeah.
But Ishan, when we were researching for this interview, we read about your backstory and how you got into this space, which is, we think, a really interesting story. So we'd love to start there. What was your first introduction into the Metaverse and all of this space, I guess?
Yeah, if we go back to like high school, I built what many would consider is like a Metaverse-like business. And so I've been a gamer sort of my entire life. And if you guys know a game named Minecraft, for anyone listening that doesn't know that, your kids probably play it or your grandkids. This was a game where you can like sort of design and create these virtual worlds and then monetize them by selling virtual items to players. And it wasn't on the blockchain. So this is what you would call like a Web 2 Metaverse. In many ways, when I did this business, it was great exposure into like running a proper business. I figured out how to code, how to market, distribution, hiring people. My introduction in the space was really running this business gave me the insight for when I explored other digital technologies like crypto and NFTs. To me, it just made complete sense. The Metaverse wasn't like an if, but a when. I was just thinking, hey, if my players in the Minecraft game, if they owned the items that they were buying from me and they were trading and swapping it, and I earned, this fee from creating these items, there would be a lot more engagement, probably a lot more. The average revenue per user would be a lot more. And so to me, I was like, hey, this is going to happen soon. And so during this time, like I guess any other kids that are making, online businesses, I kind of got addicted to the rush of making money online, like out of nowhere. I think I was this very curious kid that thought business and investing was very fascinating. And now that I had like money coming in from a small business, I turned to the markets and, loved the concept of your money making money as everyone does. And so, I went pretty ham on investing during the high school phase. I was one of the top posters on like Hot Copper. I remember like in physics class, I was like reading through all the 4 C's of all the small caps and looking at all the 3 B's. I think it's like 2A now, but calculating the fully diluted market cap of all these like companies. And I was part of all the rallies that were in the past like 5 years. Brain Chip, Get Swift, the weed boom, the milk boom, all of it. And so all that stuff I was doing, just got me introduced into sort of investing in business, I guess.
Making money out of nowhere must be nice. So Ishan, you were an investor in Animoca Brands. They're a company that were focused on the crypto gaming space, but they were booted off the ASX in 2020. So can you tell us about this investment?
To add to the sort of backstory, because I was doing all that stuff, I guess I was like involved in commerce and code. That's what I was primarily doing. And so it only made sense that I would go study like finance and computer science in university. And then during uni, I was trying to find like the next big investment. Everyone wants to like find like the one that goes 100x. And so during that time, while I was looking for that, I was like, okay, I need to like work for people. I need to learn. I've never done any of this stuff before. So let me learn from people that can sort of help me. And I was doing pretty well professionally. I worked for a guy named Sean Puri who sold his company to Amazon. He was in Silicon Valley, and I started as like a glorified intern, but I ended up becoming a VP for his family office, investing in building sort of the companies under his Amazon winnings. And I did the podcast stuff, My First Million, and we had a lot of investors and sort of entrepreneurs come on that. And when I was editing all the episodes. So when I'm hearing thousands of hours of advice, I kind of start applying that to every single investment I see. I'm like, hey, with this guy and this guy and this girl, and they all sort of apply the same sort of thinking to this investment. And so that ended up being sold to HubSpot, which is a public listed company in the States. I was head of growth for Wes Blundy, who's based in Sydney, and also Sean's like 8-figure D2C brands. Yeah, I had a bit of dry powder at this time. This is probably like in 2020. I was doing pretty well. And you tie all that together, plus my insight from those Minecraft days. When I came across Animoca, that was a no-brainer for me. I had some money now, and initially I came across Animoca probably when I was 18 years old, and I put like $2,500 into the stock. It was publicly listed on the ASX, like you guys mentioned, and it quadrupled. It did well until it delisted, and it was a pretty sad day for everyone that was in the stock. And although it was technically worth $0, Animoca still represented to me single-handedly the best asymmetric upside bet to NFTs and Metaverse. When it was late 2020, so it's not too long ago, I think crypto hadn't made like the new highs yet, and NFTs and Metaverses, it's only like almost a year ago, but NFTs and Metaverses weren't really a thing at all in terms of in the mainstream. But Animoca itself, was a Hong Kong-based company dealing in blockchain and crypto assets. At the time, was worth nothing, and so this was not a company or a market that was on the up and up. So it didn't make sense to buy then. And so many wanted out. All the sort of past experience I had, I was like, no, this company's ticking the boxes. I wanted in more than ever. My conviction grew. Others started to become a bit frail. This was no longer a public company, so I couldn't just market buy the stock. I had to go out and find shareholders. And so I ended up coordinating a block of shares with 7 shareholders to buy at a significant discount. I guess in a way they thought they were shoveling dirt onto me, but I thought I was buying a gold mine essentially for free, right? And so that was at the end of 2020. Bought the block of shares. I didn't know it was going to happen so fast, but NFT volume started skyrocketing immensely. And shortly after I bought the shares, there was like funds reaching out to me saying, hey, they want to buy up all my shares for $1 million. So I was like, oh yeah, wow, this is like, I'm 21. I never had like any, money before. So it was a little bit crazy, but I ultimately said no because they were super aggressive in wanting my shares. So I thought, yeah, something's around the corner. And so my hunch was right. A few weeks later, they raised at $1 billion valuation. And so for context, I bought the shares for about a 50 million valuation. And 12 months after that, they raised at like an $8 billion valuation. So that's like the sort of Animoca story in a nutshell, I'd say, and how I sort of got into it and did all that.
It's a pretty phenomenal, story. You had a Metaverse business while you were in high school. Most people wouldn't have know the term Metaverse when they're in high school. Then you had this serious conviction for a company that was booted off the ASX and was seriously sort of unloved and unappreciated. And, starting and I guess having such a big win at such an early age, a lot of people would take a break, maybe buy a house. I think Mark Cuban, when he had his big windfall, just bought a round the world ticket and went traveling for a while. But you're doubling down on this space. You're raising a fund to invest in crypto, Web3, Metaverse. Why double down and raise the fund rather than enjoy the windfall?
I'm not like really special in terms of there's plenty of young people who have been beneficiaries of this bull market. And so I've met some of them and, let's say that they're much cooler than me, right? They've got supercars, the houses, bottle service every weekend type thing. That's what, crypto is kind of known for. Unfortunately, I'm just a massive nerd. And because of that, I truly see what's in front of me while I was, a part of these projects and investing in them early on. This run up in crypto recently was just crypto as a whole going from 1 trillion to 3 trillion. And that's like in 2 years. And although that's a lot, 1 to 3 trillion, I believe that this is going to 100 trillion over the next few decades. And so that's what excites me. The long game excites me. Even just in a 5-year time frame, I think there's probably going to be many instances of companies going from zero to $1 billion in lightning speed. I can't take a break. I feel like I don't want to. I feel like missing a few months could mean you miss out on sort of these generational outcomes. And so, I don't get distracted by the paper wealth because, a lot of my Animoca, I still hold all of it. So it's on paper. That's the investment. But even the liquid investments have gone well for me because I did a bunch of these metaverse investments. I'm just putting that all back into the fund. And, although I'm extremely grateful for the position and the sort of investments going well, the so-called windfall is relatively insignificant compared to, I think, the trillions of dollars of value that's going to come over the next 5, 10, 20, 30, 50 years. And I like that there's this Warren Buffett, he had a quote back and forth in the 80s or something where he's like, I don't care about a company's quarter results. I think that's right. Yeah, don't look quarter to quarter. Don't get bogged down and take a break then. I think, this is just kind of starting, and what great time to sort of raise a fund and double down, especially when things are 80% off discount. So I feel like it just makes sense to, I'm a bargain hunter in nature. I bought the Animoca shares at, basically dirt cheap for free. I'd love to do those sort of investments again. Yeah, nice.
So let's turn our attention to Geminio. You're partnering with Jack Teo, the son of TPG founder David Teo, and you've launched Geminio. So how did this partnership come about?
Yeah, so I guess people started hearing about the investment, and Jack Teo, he sort of, his family started TPG and did the merger with Vodafone. He sort of ran Teo Capital, built Oscar Wiley. So he did all these things, he had all these accolades, and he cold emailed me after reading an article about my Animoca investment. And he said he was very impressed with the investment and that we should chat. It was literally just those words. It was very quick, short. And so we just started chatting every day about projects that we're involved in. We're exchanging deal flow. And I think after a while, he was like, look, everything you're touching is sort of turning to gold. You should start a fund and I'll back you. Yeah, that's kind of the story. It's pretty simple, cut clear. It's pretty random. I never really wanted to sort of, I guess, start a fund. I was like, hey, I think a part of the reason why I'm doubling down now is, like I said, my Animoca stuff. It's still I hold all of it. I'm doubling down. I don't have more money to deploy into all the great projects I'm seeing. So why not raise a fund to keep doing what I'm doing and to do it with him?
So you're raising money from high net wealth individuals, many of whom probably, I'm assuming most of whom didn't make their money in this space. So crypto, NFT, Metaverse, Web3, I'm sure you get a lot of confused looks from investors when you're speaking to them.
Yeah.
How do you describe it? Give us the elevator pitch for this whole area of the market and why it's so exciting.
Yeah, I guess the pitch here is you're right. A lot of the roadshow I did to raise the money, it was an education lesson for most people. And the first thing I would say is at its core, is the world going to be more digitally immersive or less? Right? Are we going to go from these cool electric cars like a Tesla? It's nice, futuristic, simple. And are we going to go from those and then go back to horses and carriages? But probably not, right? And so, if that's the case, then as the digital world starts to eat the physical, I hope you agree with me that digital assets that live within those digital worlds are going to be deeply re-rated to reflect that. So, I think attention is a derivative layer of what forms GDP in the physical world. If more of your attention switches from the physical into digital, I think that your dollars are going to be spent in a digital world on digital items and less on the physical world with physical items. And so a lot of people are coming to this conclusion that these digital worlds are providing an entire new layer of GDP, and it's up for grabs. Yeah, a lot of these investors, like you're right, they're pretty old dudes that don't know much about these digital worlds, and they've never like played these games. And so I say to them, like, look, if you don't care, one day your children or your grandchildren might care the same, if not more, about their digital lives than their real one. Even just today, like people care about, they don't really care about how they look in real life so much. When they take a photo on Instagram and they put a filter on it, they care so much about how it's going to be perceived online in a feed. Some of that stuff is going to transcribe and just get more and more sort of towards sort of immersiveness in the future. And so even when some of the guys don't agree with me and don't agree with that statement, I say it's fine because $1 trillion Facebook does, right? Yeah. It's why they've made like this initial $10 billion bet that the world is getting more immersive. So and then when you just look at that, that $10 billion, that was in 2021. They're spending more year after year. They have a minimum budget of $50 billion over the next 5 years. That's 1/4 of their earnings. And then you just take that, you take one company's annual year, 1 year budget of R&D and compare it to the market caps and the valuations of some of these tokens and assets. It's trading less than that. Something's off here. Either big tech is over investing, or some of these assets in the digital world are probably undervalued. That's the thesis and the elevator pitch of, hey, this might be where everything's at.
It's a fascinating space, one that we're constantly sort of trying to get our head around, and offers a lot of discussion in the office. What assets are you targeting for the fund? And then how do you think about investing in the assets themselves, NFTs, cryptos, tokens that you just mentioned, versus the companies that are making these assets, the Decentralands, the Sandboxes, the Roblox of the world? Where do you sit there?
I explained that, and you have to look at like, where does the investable opportunities lie? Because I can say all that, but it's like, where do we invest? And I think it's highly fragmented, right? It's not just venture equity. You really do in a way need to live in these worlds to take advantage of all the asymmetric upside. There's like the virtual hosting environments that may be equity or token based, but then within those worlds, there's NFTs as well. And so whether it's an asset in the form of utility or display, or digital real estate, or like these, art collectibles, it's all pretty fragmented. And so our core investment thesis, it goes from like, hey, in 1999, which is the year I was born, there was like a boom happening, kind of like the one happening right now, and it wasn't for like crypto or NFTs, but it was for something we're very familiar with today, which is the internet. It's the ultimate case study for what's about to happen again. Back then, when the internet wasn't so familiar, there was about 150 million people on it, and I bet the 150 million people didn't think they were so early. But having 5 billion people on the internet today, 150 million sounds pretty early to me. And so that's roughly the same amount of people that have crypto wallets today. I think we're very, very early. Biggest gains are yet to be realized. And so I look at, okay, what were those 150 million people doing back then to sort of help where should I invest the money? Back then, I was a baby, so I don't really know. But like actually like reading on the internet and what people were doing it was pretty boring, right? Like from what I've heard, the internet was a way for people to access and read information, mostly news and research. But the innovation there was like the cost of transport for content became essentially free. And so as time goes on, structural changes happen that allows like the second wave of the internet, Web 2.0. People had more access, faster internet speeds, cameras in their pockets, websites and apps that created a social life online. And then that sort of dawned the era of everyone becoming a content creator, whether it's music, videos, games, art, whatever, selfies. If you guys have taken a selfie and put it online, you're a content creator. And so internet gets more vibrant and richer, community starts forming, we start spending more time on our digital lives than our real ones. And so that's when I say to investors, like, look, Metaverse has already been a thing. Like this isn't something that's new. The habits haven't been just forming now. They've been forming over the past 2 decades. Your Twitter feed is a Metaverse. Facebook's a Metaverse. Going through TikTok's a Metaverse. Playing Fortnite is a Metaverse. When you're at home, when you're on your couch and on your phone and just scrolling through feed, what are you doing in real life? You're just static in the real life. You're not moving. You're like, your mind is being consumed by this phone. You're living in a digital world. if we sort of clear up what the metaverse is, then within them, what's like the sort of the next step, what more is there to be done? That's sort of where we come in. We're like, okay, these metaverses are being built. The next wave of this is people, if they live in it, they're going to want to start, owning things. That's where I'm like, okay, the investment thesis is we're going to invest in anything that enables that ownership mechanism in these digital worlds. That's going to, these billions of people that are going to come on board, they're going to want to start owning. And so those existing metaverses that I just talked about, whether it's TikTok, Facebook, whatever, they've already proven that people will buy items in digital worlds. Like this is not like I didn't have to argue with any investors about this. Like if you look at a Fortnite or a Roblox, that entire industry is generating $100 billion a year in revenue, and that's people that are willing to spend money on something that's physically intangible because they are living in another world where it means something to them or to their friends or to their inhabitants of that world. And so we agreed digital items can have real world value because people are already spending money on it. And then the interesting part is like, okay, how much more money would you spend if you truly owned these items? It wasn't by a platform, but you actually owned them, and you could take these items to other platforms, or you could sell it for some money, less or more than what you paid for it. Maybe you'd be willing to convert more to purchase something that wouldn't immediately go to zero, or you'd purchase it because, hey, I can actually make some money here. That encompasses that world encompasses the companies that are building those type of experiences. So like you mentioned, the Sandbox, which we're investors in before the fund, like in Decentraland, those are the people that are creating these, they're using software to create these virtual worlds. And then later they'll couple it with hardware where right now it's maybe on the PC or on your phone. But yeah, later we have some integration with maybe an Oculus or some augmented reality headset to make it more immersive. And then the protocol layer is the NFTs that lets you own the actual creations that you're building in those worlds. And so that's one layer, like you mentioned. Second layer would be the actual tokens themselves that drive the economies of these worlds, which I think a lot of people don't really realize. And I think this is very interesting for your the listeners to understand is I think a lot of investors will miss out on these new age assets because they apply old age investing principles to them. You can't value these worlds like stocks. You have to value them like nations, like countries. You can't really use value investing frameworks for blockchains because you come up with these like ridiculous ratios like 5,000x, 7,000x or whatnot. And so, when you look at some of these tokens, if you want to value it like a country, you have to prove that there's a, one-to-one relationship between how much price of the token goes up and the growth rate of that token GDP, aka probably like the aggregate output of that economy. I think the value of the chain comes from probably the economic activity that it supports. So if you're trying to like relay it with real life and in the physical world, the economic output could be transaction growth of the chain, of the blockchain. So as transactions go up, we'll see price should go up. If there's wallet growth is kind of like the working population of like a real world economy. Wallet growth goes up, price should go up. And then there's stuff like TVL growth, which is like the amount of tokens that are like locked and staked in one of these projects. And so that could be like the financial sector of the economy. These are sort of new age assets. When you're valuing these tokens, that's kind of a way to look at them and to invest in. And then there's the direct NFTs, which you could do a million things with these NFTs. Right now, they're used for like flexing, and people are buying apes for like $1 million. That looks absolutely insane, but in the future, a lot of these NFTs won't be like worth $100,000 per NFT. They'll just be regular, under $10. You buy them, you use them, you sell them. Even if the price of like these NFTs go down as a whole, I think what's really important to look at is the transaction volume and the actual use case behind them. That's what we're looking at. Those are the projects. Those are the three areas: the venture equity, which is the companies that are building these environments and host these virtual hosting environments. In the token space, we're looking at investing in any tokens that are powering entire economies and there's actual use cases behind them and like kind of powering an entire nation or a country. And then in terms of the NFT space, we're not investing in the sort of toads and the skulls that go off for like $100,000. We're like to invest in the actual utility behind them, whether it's a piece of land in one of these worlds that you can own, and then you can build experiences on those lands that generate income. Because remember, this is the first time that you can have a digital asset that's yield generating, which is like insane. You could, I've got a friend that bought a piece of land in the Sandbox, and is like getting paid some designer like $300 to make an Eiffel Tower on it, and he's charging people like 5 cents to come and just look at the Eiffel Tower, and that's income generating. He bought the land for like $35. He's already made a couple $100. This is the kind of world we're heading into, where like there's unlimited possibilities. A great one is probably get people to understand why I'm interested in the GameFi space. It's probably like the F1 Delta Time, or like the racing metaverses where you own the racetrack. That's the piece of land. And then you can host these, races that have a prize pool, and then people will pay an entry fee to sort of race on that for the prize pool. And then that's how your land becomes income generating. There's so many opportunities to go through. So 3 main assets: NFTs, tokens, and the equity, the companies that are building them. And then within them, probably the stuff that excites me most is the GameFi stuff, because that's my background. I've been a gamer. That's what I understand. But it can encompass everything. There's DeFi. There's the on ramps and off ramps from going from fiat into tokens. There's a lot of space. So I just gave you guys like a massive rant. But
it is just.
I think it's pretty important to understand. It's really fragmented.
It's fascinating, and just some of those examples and what you're talking about there is just. It just blows the mind in terms of this whole world is sort of being created before our eyes, and there's a real gold rush there, I guess, in terms of people trying to figure it out and trying to see the opportunities. We're going to take a quick break, and then we'd really love to get into, I guess, what the future could look like and some of the different players vying for space in this gold rush. But before then, we're going to take a quick break to hear from our sponsors. So, Ishan, before the break, we spoke about your background, how you got into the Metaverse, Web3, crypto space, and a little bit about the fund that you're raising. But now we'd really love to get into, I guess, the space itself and what the future looks like. So let's start broad, because I need to start broad before we get specific just to get my head around it.
Yeah.
Give us an idea of what the future could look like as digital worlds and digital assets start to take precedence over physical worlds and physical assets.
There's pros and cons to the future that we're heading into. I think a lot of people are very scared when I say, hey, look, a large portion of your 24 hours right now that you're living in the physical world will be slowly converting into a digital world. And people think, oh, great, we're going to be, it's like a dystopian type world where we have like these, headsets on our head for like half the day. And we sort of become, it's like that WALL-E type world that we're living in. Everyone gets super fat. In a way, like I personally don't advocate for that. I think that the world that I'm most excited about is this is beyond entertainment. I think when you're allowed to own on digital worlds, that gives ownership means like you can earn, and that's the magical thing with this whole metaverse stuff is that we will soon live in a world, and we've already had this actually occur over the past year, where anyone from anywhere can start earning money digitally online, and the barriers to entry will just get lower and lower. And I guess to give you an example of that is there was a metaverse called Axie Infinity that some people know of, where it caught a lot of attention in the Philippines, in these developing nations, where there's people that were in poverty that heard about this game. If you guys don't know what this game is, it's basically like the Angry Birds of the metaverse. It's like a little phone game. You buy these cute creatures. You can train them up. You can verse other people with their teams of creatures, and if you win, you get the token. And with that token, you can sell it for some real money. This dawned like this new era of what they call play to earn. These play to earn games. The outcome of that has been pretty inspiring to see, and this is like the very first layer of what could happen in the future, where right now, people were playing these games on their phones and they were earning some money, and some of them were supplementing the sort of lost COVID income. Some of them created fortunes. There's plenty of case studies, and I urge people to watch the documentary on Axie Infinity, and that sort of outcome there. You can just watch it on YouTube. And that was the first case of it. It's like I think the biggest thing that excites me is a lot of the time in the past, it was usually like nerdy kids like me playing these games. But now the metaverse eats everyone. And what I mean by that is, in the Philippines, there was an 80-year-old couple playing this game to pay for medicine. This is no longer just like nerdy kids in their bedroom. This is like, hey, if there's some real working opportunities, from your bed, like we had COVID unfortunately happen, and plenty of people resulted to remote work and working from online. I think that's the sort of future we're heading in, where if people want to, and some people need to, right? They don't have any other opportunities elsewhere. A lot more people beyond just the gaming stuff are going to find either these opportunities online and work from online, and it's not so much the sort of world that we luckily live in these sort of first world countries. A lot of these developing nations are going to sort of fast track a lot of growth through tapping into the metaverse, and I think that's the future that I like and I want to see and I want to help build. But in terms of what our lives would be like, I feel like a lot of it will be, it's kind of like the Ready Player One, or if you guys have read Snow Crash, it's a world where for the first time magic can start to seem real. We've got a combination of technologies. If you just put like an Oculus headset on your grandma or something like that, it is insane. I don't know if you guys have done it before, but yeah, it is insane like how fast some of this technology is progressing to make digital more immersive. I know Meta, previously known as Facebook, are working on like the finger haptics to make it so you can actually touch things in a digital environment. The way it looks like is you will either access a digital world, probably through a headset or glasses, and it's going to most likely meld with the physical world, so some form of augmented reality. You'll either work from it, you will game in it, you will be educated through it, you can hang out with your friends in it, and then through that, the world will be pretty magical, right? This is, you're no longer restricted by physical space or physical constraints. You can see dragons flying along in the sky. Like, you can't do that in real life, right? The world gets a bit more colorful in that way. And on top of that, since you're living in it, you'll probably start wanting to own some stuff. So just like how you'd go out, you'd buy a new apartment, you'll go to like a furniture store and you'd buy a table for your home because you want to decorate it. This is your place of where you live. You're so proud of it. You're going to feel the same about your digital home, where you're going to have friends from other countries and your friends that, or maybe like in different cities, they want to come visit your home. You're going to want to spend real money to have a cool looking table because like this is now where you hang out and where you want to impress your friends. And so, yeah, I think that's kind of the idea of where this is going. And, it's been developing over the past 2 decades. We're caring more and more about what we look like in our digital presence. It's just going to sort of manifest itself more as we go along.
All I think when you say your digital home is that's another house price that will get out of reach and we won't be able to afford.
Get in now. Get in now. I remember coming across an NFT that was a replica of an apartment in the Burj Khalifa.
Okay.
Yeah. Not bad. Level 30 or something like that.
Did it come with like it was your place in the metaverse?
I think it was your place in the metaverse.
Okay.
Yeah. There was like just like that you're buying off the plan here. They said they were going to build like a full replica and you could buy one of the apartments in there and eventually, take your mates and go hang out.
Yeah, I think, like guys listening, if you think house prices in the real world are pretty expensive now, just wait. The metaverse, they're going to get expensive soon enough. So I'd recommend, live in a tiny house in the real world and just put the headset on and live in a mansion in the metaverse. That's the way to go.
Just wait until the banks start realizing they can offer mortgages in the metaverse.
Yeah,
just opens up a whole other world for them.
Yeah, all the stuff is going to get pretty exciting.
So when we talk about metaverse, one thing that we often try and get our heads around is the different visions of the metaverse. So like Facebook obviously changed their name to Meta and they're building their version of the metaverse. NVIDIA has been speaking a lot about the Omniverse. Then we've heard from a number of people in the crypto space about the decentralized metaverse. How do you think about these different visions for the metaverse? And I guess the key question is, are they compatible with each other, or are some of them going to have to lose as this whole vision gets built out?
I think for the most part, not a big fan of what Facebook and a lot of the big tech guys coming in and what they're doing. I think a lot of they're building these walled gardens, right? Where they're going to want you to, they want you to live in their world and use their services. And the whole, I think, the crypto community was born out of, hey, this is decentralized. We want to use whatever we want. We want to work together. We want all these projects to sort of mend it and work together. We don't want to, go to a centralized authority and start building adjacent to them. So are they compatible with each other? Sure. I think this is not like a winners take all type market. You're literally talking about when you're building a new world, anyone that's living on the physical earth that's the TAM. So I feel like when you have like billions and billions of people ready to onboard, I don't think one world is going to be the winner. It's not a winners take all here. Just like in Web 2, I think a lot of people had this question as well, where they were like, hey, is Facebook, going to be the end all be all? Or when it started out, is MySpace going to be the end all be all? Or is Twitter, Snapchat, TikTok, like all of these new ones come up and about, and they a bunch of people flock to each one and use them how they will, and they use it in asynchronously, right? Like I'll still message people on Messenger. I'll go on TikTok and watch a few things. I'll go on Twitter like to talk to different type of people. So I think it's going to be very similar. It's just a pattern. It's going to be very similar to Web 2. This is just the next iteration of the internet. This isn't like an entirely new thing. Metaverse is a massive buzzword. We won't be saying it hopefully soon. It's a bit cringy. It's a bit lame. So I think that after a while, it's just going to be like how Web 2 played out. We will be transporting and portaling through all these different types of metaverses, and they will work with each other. And I think big tech just has like the sort of innovator's dilemma issue where they're too big and they're too slow to sort of create these new and exciting experiences that the people really want. That's what I'm most excited about. Otherwise, people say, hey, why don't I just buy Facebook stock or Meta stock if I want to be bullish on the metaverse? That won't really work out, I feel like, because I have a hunch they're not going to be the big winner here.
Ishan, before we just move to chatting about investing in the space a little further and close out the interview, I'd love to get your thoughts on your assessment of the Australian crypto industry. We've seen success with Immutable, Digital X, and a number of other big players starting to emerge as well. So how does Australia compare to some other countries around the world?
I think so far, Immutable guys doing the best job so far putting Australia on the map. I think I assess the state of everything by talking to the people on the ground. I forget the stats for a second. You have to see like the enthusiasm through the eyes of the people in the trenches building these projects. I do a lot of talks. I go to unis. I'm helping sort of run these like Web3 programs, and seeing students being so excited that like you're right. You're part of like this gold rush. You feel like, hey, this is my chance to sort of live like what it was like to be in a .com bubble or like the social media era. So in terms of companies being built out of here, I think there's a lot of great talent and a lot of projects in the early stages I'm seeing being sent to me a lot. And it's usually, the younger people jumping on the bandwagon first. But, obviously there could be things that could help more. Like, it wasn't the best idea for them to boot off Animoca. Although that was essentially, they were Australian stock. They were listed here. That could have been a really great Australian story. But, now that they're back in sort of Hong Kong and, versus the other countries, I think Australia is still a little bit behind in terms of support. I think Singapore is like a great place where a lot of activity is happening. In America, obviously America still has a lot of stuff happening in Miami and LA and New York, and a little bit less of San Francisco, where you'd think where all the stuff is happening there. But I think Australia could still do a lot more to sort of get this through. And even just us starting like this Metaverse fund, it's been a bit of a journey legally and structurally, basing it out here in Australia. It's something that I've had to do a lot of education and a lot of talking, building relationships with people to sort of get on board. I could have had a much easier time doing it elsewhere. I truly think if this is the next iteration of the internet, the next Atlassian is going to be born out of Web3, and there's going to be great Australian startups, and I think Australia I think it's up for grabs, like I said before, and people in Australia, I think multiple startups in Australia will shine in Web3, and hopefully I can find them and invest in them. I'd love to do that.
Speaking of investment, it's really easy to get excited about this space and everything that's going on, and you hear some of these stories, and you're just like you get really excited and really bullish, and you want to get in there. But as with any sort of new technology, there's a lot of hype, and there's a lot of projects that are real, and then there are a lot of projects that may burst with a bubble if it does burst. So how do you separate, I guess, the signal from the noise? What are some of the things that you look for to really know that this is a real project?
I think the biggest thing so far is community engagement. People actually active and talking in like the Discords and Twitter, and a lot of projects these days, like you said, there's a lot of hype and there's a lot of like botting of community, and you know they'll buy fake followers and they'll buy fake activities in the Discord and stuff like that. So you really need to go in and talk to people. I actually go into projects and I'll see the people that are in the Discords and I'll like DM the people that are in those Discords and like see if they're a real person. I'm like, hey, where are you from? How old are you? Blah blah blah. How'd you find this project? I'll see if they're actually talking. You can tell if they're a real person by having a good chat with them and even maybe getting a voice call and getting a group of them. So I think that's number one. I think transparency is huge. Getting access in terms of like to their GitHub and seeing the repo and like actually looking and auditing the smart contracts so they can't rug you. Which if people aren't familiar with that term, there's a lot of these scammy projects that will build the hype and then liquidate all their tokens on you so they can sort of run off with the win. So you have to assess the governance design, see the incentivizations of the tokenomics, really assess that, see what the network effect is and how strong it is. And it'd be the same as Web 2 in terms of assessing the team, like what's their background, what's the locking period, I guess it's a pretty good one for the how they're going to vest their tokens. And is this not a sort of rug pull? That's the biggest thing in crypto I think you have to look out for it is the Wild West. It's like you said, it's the gold rush, and so a lot of people are trying to get rich quick and run off with a buck. There's a lot of things you can do in terms of mostly on the sort of qualitative side. Hey, look, is this what you're building real? Are people gravitated toward this? Is this traction in your product? Is everyone equally aligned for the first time? And this is the beauty of Web3. All stakeholders have incentive and they're all aligned. So your users, your investors, the builders, your sort of developers that are building on top, everyone's aligned because you have this token. And I think it's really important to assess all of that to try and distinguish the fake from the real.
Well, Ishan, speaking of hype, and to close out the interview today, recent data from Non-Fungible has suggested that the average selling price for an NFT has dropped 70% from the 2nd of Jan. How are you thinking about this market fall? Will we be talking about NFTs in 6 months' time, or is it a thing of the past?
Yeah. So obviously me doing the fund and being fully invested. I don't think it's a fad. But I think the average selling price is irrelevant in terms of in the future, NFTs individually shouldn't be worth millions of dollars. Most will be like under $10. The actual participation of people in volume you can see that through the volume of the trading of volumes should be the actual indicator of the activity. I think once the speculation dies down, real activity starts building. That's what we've just been through. The first phase of NFTs was like these sort of art collectibles, how you buy them and you flex them and blah, blah, blah. That is just pure speculation for the most part. And that was only really the case because, hey, look, it's really easy to like spin up, art. Like it's pretty easy to draw stuff and like, computer generated art and to sell it off. It's really fast. That's naturally going to be the first thing. And I don't, this isn't my quote, but anything great that has impact, someone said, starts off as a plaything for the rich. And that's what NFTs were. A bunch of people made, these millionaires and billionaires were minted because crypto was going up. And what are they going to do when they have all this money? Are they going to go buy the stuff that these Web 2 millionaires and billionaires did? Some of it, yeah. But, some of the people would want to allocate some of their winnings back into the ecosystem that made them, that was their wealth creation vehicle. And so that's why you've seen like all these sort of crazy NFTs going for millions of dollars and whatnot. But this is still from a pretty small sample space of a few million people. Although the average selling price based on a few million people is probably going to drop because most of them were speculating. Once, a lot of these projects that takes time to build that are great projects, especially in the GameFi area, which I'm from, to build like a great AAA title game, you can't build in a month or 30 days. It takes like a long time. A lot of those will start to come out that are true and real projects that people want to play first and the NFTs are secondary. It's not that the NFTs are first and they want to play secondary. They really need to be hooked on and want to play and be in these worlds first. Yeah, that's what I think about sort of the market falling in terms of this sort of selling price. I think that, speculation dies down, the real activity starts building.
Yeah. There's a mental model that we talk about a lot on the show from Carlota Perez, talks about how whenever there's new technology, capital floods to that sort of new exciting technology, that capital forms a bubble, that bubble bursts, and then out of that, the sort of real projects, real companies, real use cases of that technology emerge. And in the .com bubble, we saw out of the ashes of the 2001 market crash, we saw Amazon and Google and Microsoft really emerge and have their 2 decades of dominance since. So, Bryce and I talk about that in the crypto and NFT space. We don't know enough to start assessing what those projects and what those tokens are, but it feels like you do, Ishan. So I'm sure this won't be the last time we speak to you. We're very excited to understand this more and get our heads around this space. But today we have run out of time. So until we next get you on the show, if people want to follow you online and learn more about the fund and what you're looking at, is there anywhere in particular they should go? Yeah,
I'm mostly on Instagram and Twitter. So on Instagram, it'll just be my name, Ishan Haque. And then on Twitter, it'll be Ishan Haque just without the UE because I wasn't an OG and I couldn't get my on Twitter. So I'm mostly on those two things. And really, thanks for having me, guys. My girlfriend's a huge fan actually of you two and listens to the show a lot. So shout out to my girlfriend, Nicole. Thanks, guys. It's really awesome being on here. And I could talk about this Metaverse stuff for hours. There's so much to talk about. And so the Investor Roadshow goes for like a couple of hours. I'd love to come back on again. And I'd love to hear the feedback from the viewers. So let me know, message me on Instagram, Twitter, and let me know what you guys, ask me questions or whatever.
We will. One of my New Year's resolutions that I wrote down at the start of the year was to buy a property in the Metaverse. So this is reignited.
I'll hold you accountable to it.
But thank you very much. Appreciate your time.
Thank you, guys.
Hey, thanks for listening to this episode of Equity Mates. We love hearing from you, so drop us a line at contact@equitymates.com, or even better, go to your podcast player and leave a 5-star review. Also, a reminder that the Equity Mates content train doesn't stop when you've run out of episodes to binge. We've got a brand new website, a Facebook discussion group. We're on Instagram, YouTube, and slowly making our way as an influencer on TikTok. Well, that's Ren. So come and say hello and join the community. We'd love to welcome you. Until next time.
Equity Mates Investing Podcast is a product of Equity Mates Media. All information in this podcast is for education and entertainment purposes only. Equity Mates gives listeners access to information and educational content provided by a range of financial service professionals. It is not intended as a substitute for professional finance, legal, or tax advice. The hosts of Equity Mates Investing Podcast are not financial professionals and are not aware of your personal financial circumstances. Equity Mates Media does not operate under an Australian Financial Services Licence and relies on the exemption available under the Corporations Act 2001 in respect of any information or advice given. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. Do not take financial advice from a podcast or video. For more information, head to the disclaimer page on the Equity Mates website, where you can find ASIC resources and find a registered financial professional near you. In the spirit of reconciliation, Equity Mates Media and the hosts of Equity Mates Investing Podcast acknowledge the traditional custodians of country throughout Australia and their connections to land, sea, and community. We pay our respects to their elders, past and present, and extend that respect to all Aboriginal and Torres Strait Islander people today.